Welcome back. Doug Burson, CPA, PFS, and I've been in the industry for 25 years now. So go ahead and subscribe. Help me get to 1,000 subs. I'm going to answer your financial advising, your tax, and your small business questions and give you real life answers, not just stuff from a book. So the following video that I'm going to show you is edited down from a YouTube event we did recently. And that's like getting to sit with your CPA, ask questions, hear other people's questions asked and answered, and get to do that for free. That's a lot cheaper than getting to come sit in my office where you're going to have to pay me to actually have that conversation. So I know you're going to like that. Join us the next time we do one. But the following excerpt is from a question where a guy asked, can I accelerate depreciation on my rental property? Some of my buddies said I can. And so I answer that, and then it took an interesting twist because I'm just talking real life stuff. So go ahead, we're going to start that now. If you find it useful, go ahead and subscribe. Well, here's something. What if you're thinking about selling your building in the next couple of years? What if we did a cost seg study, and then we got that big upfront depreciation, got a big deduction, lowered our taxes a ton for the next couple of years, but we knew we're going to sell this property. This is where it can be really cool. You can do that cost seg study now, get the big deduction. Got to be careful there because there are some snafus. Don't just go do this without talking to somebody. But then we 1031 exchange it into another building, or there's some really cool things out there now in the investment world where you could take that building, sell it, take all that gain and roll it into a DST, a Delaware Trust, which for most people, the easiest way to think about that is kind of like a REIT or a investment where a bunch of us come together and buy a really nice apartment complex in the Southeast or the Southwest, somewhere where it's going to grow, it's going to be safe, it's going to do well. But we could take all that gain, roll it over there. We got the big tax deduction now. We're going to roll all that gain into this DST. It's a part of our estate plan. Then when we die, our kid inherits this DST. They get a step up in basis. We got an income stream because that DST is going to be kicking out rental income. Basically, it's not quite that simple, but basically kicking us out, 4, 5, 6% a year in return on our investment. So we have an income stream without all the headache of managing, and then our kids inherit it tax-free. Or there's even one that's even cooler now where you could do all those same things, but after 3 years, a REIT has agreed to buy your Delaware Trust. It rolls into that REIT, and now you can start pulling the basis back out tax-free and leaving the gain in there until you want to, or your kids inherit it. Really cool stuff. If you have a large building, over $500,000, and you've depreciated it, or there's something like this, you may want to call me on that because there's a real opportunity there for you to really save some taxes and pass that on to your kids in a very tax efficient manner. Meanwhile, continuing to have an income stream during your retirement years with no management headache. I mean, they can be awesome. So that was actually a really good question. I don't know, I kind of went with that, but I like that one. So I think that's it. Does anybody else have anything else before we wrap up? Well, there you have it. That was pretty interesting. I just talking off the top of my head like I would if you were sitting with me, and we really solved some things and brought up some things that maybe you weren't even thinking about. I hope you thought it was useful. We'll do more on the 1031s and the DSTs in future videos, so make sure you subscribe. I'll get into the details, the nuts and bolts of how they work. They really are powerful, and they can save you a ton of taxes, and also are really important when we're doing estate planning. So once again, subscribe, and I'll see you again soon.